Hey traders, Raghee here. Welcome to Charts and Coffee. Great to see everyone. Happy Thursday, everyone. Hoping those of you affected by this storm are staying warm and off the ice and whatever other craziness is happening. I see it's freezing and below freezing all over the US, but if you're here, that means power's on and the internet's working and it's a brand new day. I hope everyone, again, is doing well. So let's get to what we have going on today. And that is, let's jump on over to our economic calendar. All right. When we have, right, Federal Reserve on our journal. Now, I'm presuming all of us are keeping some sort of trading calendar, trading journal. We have high impact events written down. We're ready for them. We know the implications to our open trades and potential open trades. We know what the risk is to our accounts. Interestingly enough, the Wednesday FOMC event, while it can be a wonky day, and it certainly was until the market found some direction, the day after I have found can be just as, if not trickier. So when I come to you all with trading ideas, we're going to have our webinar, gosh, in 13 days. If you haven't already penciled that in, I should have a web registration page for you all very, very soon. When I come to you all with a trading idea or an indicator, it's because this has been tested for years, if not decades. And the idea here is that we can manage all sorts of trading seasons, right? Not just a trading year, but seasons, meaning different behaviors, different monetary policy messaging, etc. When we have right now the sort of season where the Federal Reserve is expected to stop hiking rates, we're in a transitional type monetary policy period, which means historically trends are going to start emerging as us, traders and investors, start to get out ahead of what we think ultimately is going to happen. What is ultimately going to happen based on rate of change data? In other words, what's the trend on the data? And in this case, what's the trend on the Fed fund futures? We are still widely accepting that we will hit the likely peak rate of 4.75% to 5% by March, likely hold in May, and likely hold in June. I say likely, that is the probability, but there is a sneaky little possibility that we might get one more quarter point cut. So when traders who are listening to messaging, or worse, listening to television, and people say, the Fed sounds so hawkish, remember, less hawkish is that 4.75% to 5% terminal rate, while the slightly more hawkish would be 5 to 5.25%. Both of those realities have been discounted into treasuries, currencies, indices, on and off for the better part of 8 months. This is not a new possibility, that higher 5 to 5.25%. In fact, there were times when the 5.25 to 5.5 column was actually starting to become pretty visible. So we're actually in many ways just sort of bouncing around all four of these possibilities, with the probability being 4.75 to 5%. That's the way we want to measure what the Fed says, not just their words, but where do their words land? Are yields going down? That means, let me show you here what I mean. Let's go take a look at the chart. Are yields going down? That would mean that bonds continue to generally head higher. Remember, gang, if you're looking at TLT or ZB and it's moving higher, that means yields are moving lower. What else are we looking at? What about the dollar? What's the greenback up to? Easiest way to measure that, the most direct way, better than UUP, better than DX futures, better than DXY. Just look at the 6E. This is the number one weighted currency in that basket that we just sort of generally and somewhat incorrectly call the dollar, right? It's a dollar basket. This is the number one currency, 57% weighting. If the euro is generally moving higher, and boy, has it ever been generally moving higher since the middle to end of November, dollars moving lower. And then we want to see gold move higher. We want to see copper move higher, and even crude. These are signs of a not dovish policy, but a less hawkish monetary policy from the US central bank. And then the different currencies, treasuries, metals, energies that should follow suit as we have that monetary policy supporting economic optimism, because let's face it, stonks love cheaper money. I won't say cheap money because that's not where we're at, but it sure does love cheaper money. That's where we sit right now. So I hope that makes sense. All right. Okay. So let's get to it. I see some questions coming in. Hey there, folks in the free trading room. Great to see you all. Hey there, Ann, Cott. Hey there, Christina, Debbie, Monica, Darishka. All right, cool. Great to see you all. And let's see. First up in our Simpler Trading YouTube channel, Bob. Good morning. What is my take on currencies now that the Federal Reserve and the European Central Bank announcement are both out? European Central Bank appears more hawkish than the Fed. Yes, remember, they're on the earlier part of their monetary policy uptick. The first major central bank to say, hey, we're hawkish, Bank of England. So they were ahead of everybody. Second was Federal Reserve. Third is European Central Bank. So they're on the same path. They're just kind of lower on the mountain, if you will. So that's not surprising. And by the way, that's going to continue to push that euro generally higher. But the dollar is up, what gives? Well, remember, the dollar is up maybe today, right? So Bob, great question, but look at the 6E. Let's look at the 6E on the 1 hour chart. Forget the daily for a moment, right? The trend on the daily is firmly up. And I know you know that. When we take a look at the euro, when you say the dollar's up, well, it might be up as of, say, midnight today, right? Midnight Thursday. But generally speaking, when I look at the last couple of weeks, or even the last couple of days, we're only retracing about 50% of that last major move. That's our Pingala. And that 50%, yes, it's minorly down right now, but in the bigger scheme of things, if we step back, you'll see the euro is generally strong, little bit of a sell-off. That could be profit taking on the run-up, anticipating a more hawkish Christine Lagarde, right? So I wouldn't take this too far out of the context of, say, the last 12 to 24 hours. All right. So that's the way I look at that, Bob. That's the way I'm looking at that. Next up, editor, how are you? Can we take a look at SQ on a daily chart? Yeah, absolutely. SQ. All right. On a daily, just take a look at what we've got here. The bot has the daily price movement ranges as well as the hourly price movement ranges programmed, which is great. We can take a look at some volatility levels to boot. What do we have here? Editor, I think you're going to love this. Let me show you what we got. And I'm bullish, right? Bullishness comes. Let's start with the process, gang. This is a repeating process. If you catch any of the free videos, if you're with me in the Sector Secrets Mastery Room or in the Simpler Futures Room, you know, structure first, boom. Now what? Well, take a peek. How often are we bouncing on the lower end of the daily price movement range? Pretty darn often. And that's where I want to continue to look to be a buyer. The biggest challenge, editor, to movement to the upside is going to be the 200 propulsion. We really need to establish price action above the 200, which is to say, let's transition from it being what it has been and probably arguably continues to be, which is a zone of resistance. Let's see us get above it and start testing it as support. And that's going to continue to solidify Square as now transitioning to the bullish hemisphere of this daily time frame. And that's where for a broader group of market participants, they're going to think buy versus sell. It's going to end up on bullish scans, not bearish scans. And that's an important transition, really important. All right, next up, hey there, Prince. When I say cut the range in half when it comes to setting up targets, what range am I talking about? It depends on the setup. So what's we're cutting in half could be anything from the last major move. It could be Darvis. It could be HPMR. It could be DPMR. Let's see here. It could be any of those. So it just depends on what it is that set up the trade. All right. It could be any of those basics that I've always talked about here whether that be in the sector secrets room, futures room, or here in Charts and Coffee. Yeah, it just depends on what that setup was. So again, Darvis, last major move, minor high, minor low, HPMR, DPMR, what have you. All right, next up, what corners of the market am I finding to safe during this crazy rally? I don't find the rally crazy at all, Robert. In fact, we've been talking about being bullish since last July. So not quite sure of the context of the question. What corners of the market am I finding safe? I'm not looking for safety, Robert. I'm actually getting opportunistic. We're getting long things like Freeport McMoran. We're trying to get long things like healthcare and financials. There are names in staples and consumer discretionary that are on the move too. But I don't find this rally crazy at all. It actually makes a lot of sense within the structure of some of these charts and within the structure of the macroeconomic trend, right, in terms of peaking on monetary policy. So definitely two things that we've been focused on pretty heavily for months now, right? Frank asks, are buyers too enthusiastic? Frank, I'll be frank. I have no idea. I follow the trend. So my concern about buying is going to come down to what's the multi-trend? Where are we in relation to the 200? How new, fresh is the trend? But I never ask myself, is there too much buying or too much selling? Are we overbought or oversold? Unless we're in chop, right? Then we know there's confines to the market. So I have no idea, my friend. I don't know. And honestly, it doesn't matter. And I mean that sincerely. Because what are we going to do? Short into this? Let's say I said yes, and I appreciate the question. That's the kind of, it's interesting. Those are conversations that happen on television, right? They got to fill the hours with some kind of nonsense, and oftentimes nonsense it is, right? But that question gets asked a lot, doesn't it? So let's ask ourselves that from a practical standpoint. Let's say I was to say yes, does that mean you short? We short into this? We step out in front of the train tracks and say, train, you're going too fast. I don't know. I'm not going to make that bet. So I don't ask myself questions like that. I try not to, because if it doesn't lead to a path to a practical, data-driven, time-tested setup, I'm in big trouble, right? So I try to avoid that. Hey there, Stacy. How are you? Hit the like button. Stacy is the official president of my fan club. Now, I appreciate that, Stacy. Very kind. All right, next up, Mixed by S. Good morning. Can I explain what it means when the support and resistance flipped, for example, on the SPX? On the HPMR. On the HPMR, when it flipped. Yes, Mixed. It means a lot. Yeah, let's talk about that for a moment. So if we're talking hourly price movement range, a tool that we've had now, it's a premium tool since last June. We're adding to that the big brother, the daily price movement range. But what happens when it, as you said, flips? Well, think about what time. I don't know what time it did. I wasn't looking at the SPX. But when did it flip? What it means when the support and resistance flips? I don't know that I have one, my friend. So I don't know what time frame you were looking at, but as what you were looking at in terms of the time that it flipped. ES might have flipped, right? SPX, I don't think did. The SPX HPMR did not, but let's talk about what it means when it flips. Sure. The bottom line is this. The HPMRs are really smart. They know the historical, and I'm probably looking back on the wrong day, my friend, so my apologies. But what happens when that flip occurs? Well, again, the HPMRs are really smart. And there it is. Thank you. Thanks for your patience, Mixed. There's the flip, by the way, gang. Let's look at the time of the flip. What time did this happen? 2 p.m. Eastern. What was happening at 2 p.m. Eastern? FOMC, right? So why would this flip? What is it warning us of? If HPMR's job is to identify historical volatility tendencies hourly, and DPMR's job is to identify historical tendencies from a daily or session by session basis, it's immediately warning us that we are exceeding normal, about 68% probability parameters. It's really a warning that there is a much larger than normal for this time of day amount of volatility kicking in. So it's really a built-in warning, right? It's flipping to tell you, hey, if you don't want to engage a market behavior that's outside the normal price movement range, shut it down. That's what it's there to tell us, right? That's what it's there to tell us. So that flipping is just sort of the protective mechanism visually for us to say, oh, this is not normal, right? This is not normal at all. So does that make sense, Mixed? And I think the ES flip, I don't know the SPX did, but frankly, I was not watching the SPX. But I love that you're using the hourly price movement ranges on the SPX. By the way, let's talk about something right now, Mixed. For those of you that are SPX traders, right now, if we take a look at the SPX yesterday into the close, right, we saw a little bit higher than normal. It didn't flip, but see how it stacked, see how it overlapped? That's another form of understanding we are sort of outside normal zones. Hey there, Mr. Walker. Are hot zones a daily occurrence? Hot zones, by way of a scheduled high impact economic event, no, they're not daily. We're going to have a handful every week, but no, they're not daily. Now, the next 3 days, we have a lot. So we look at the economic calendar, right, Mr. Walker? We look at the economic calendar. So yesterday, we had ISM, JOLTS, FOMC. Today, we have ECB. Tomorrow, we have NFP and the ISM services. The next 3 days are definitely more impactful. Joseph, one more. Oh, yes. Hike. Sorry if I misspoke. Yeah. Thank you. Let me make sure I'm really clear on this. Hike. So we're still looking at one, if not two more hikes. The cuts are possibly going to happen as soon as November or December of this year. So yes, thank you, Joseph. I appreciate that. We're talking about hikes, higher quarter point, higher bumps going into March or May, flattening out, maybe another quarter point more, May or June, to get us to 5 to 5.25. Less likely, staying at 4 3/4 to 5%. More likely, that means that come November, again, not probable, but definitely leading the charge, is a quarter point cut. Yes, thank you, Joseph. I appreciate that. Trader Momo asks, is the 6E reacting to the ECB? Of course, right? It has no choice. Of course, right? Just like the dollar would respond to the FOMC, just like the Canadian dollar would respond to the Bank of Canada. Absolutely. Can we use a HPMR on a 30-minute time frame or just on the 5? Sergio, yes, you can use. So what would I recommend for the HPMRs? Which time frames? Sure. Let me show you right now. Let me grab my chart again. Let's see. Here we go. So which time frames? 5-minute is my preference, Sergio, but I look to at least no smaller than 2. I prefer the 5 for the structure, but it's applicable on the 15 and the 30. I just don't use it over the 30. Once I'm going over 30, maybe the hourly. I find on the hourly, because we've been testing this for 10 months now, the hourly responds better to the daily price movement range because it's such a long intraday time frame. So really 30 minutes and less HPMR, 60 minutes to daily DPMR. And that's the way I divide everything up on my screen. So you'll see the 5-minute has the hourly, more day trading oriented time frame. The 1 hour, which is now really the most effective bridge to keeping a short-term approach, meaning having the ability to stay in the market for 1 to 3 days, but not expecting or needing the market to follow through for weeks. That's working really well with the 1 hour. And that's how we're divvying this up. Gang, I'm running over. So thank you as always. Thank you for the questions. I appreciate it. I will see you all tomorrow, same time, same station. And just to give you all just an idea, because I really feel bad when the show could probably go on for 30 minutes. Easy. When I start the show, I just start at the very top of the list and we announce the link. So if you want your question answered, get it in as soon as possible because I got to questions to about 9:08 a.m. So as soon as you get them in, I can dive into them. And I really try to give a thorough answer. So I hope that helps everybody. Um, but yeah, in general, cash, let me just really quickly, cash insomnia, no 10-year buys yet. Gas price, I'm not really super bullish quite yet on crude, RBOB, or natty gas. But keep an eye on Countdown Trader. If and when we start to shift our seasonal, I will definitely probably make sure it's part of Countdown, or we can try to bring it up in charts and coffee. All right. And then as far as bottom picking season, we've got to find those neutral environments. We've got to find those neutral environments. Fernando, I will not bottom pick a red trend, a multi-trend. I will not bottom pick until we're neutral. All right. And then let's see. Bill has a question on QS. Oh, you know what? I don't know anything about QS. I have no exposure to that at all. But let me get out of the way here, gang. But yeah, I'll be honest. No diss to him. I don't give a rip what that man says. I don't. Don't know. I don't play stocks under $10, but it seems to be in a fairly healthy uptrend. Have a stop loss, have a target, manage it. Let me get out of the way. Thank you as always, gang. I'll see you in the next show. Be good to each other.